last section, we talked about what is a stock and what is the stock market and how investing into the stock market beats, in terms of return, beats your regular savings account in the long run. I know a lot of you are probably asking, how do I pick a good stock? So how do you pick a good stock? Is it by hype? Is it by guessing? Is it by throwing dice or playing a lottery? No, it's your money. Remember, you work so hard for that money. So you should be able to know what you are investing into. So choosing a good company is not about guessing. Choosing a good company is stacking the odds in your favor and getting a good company at a reasonable price. So the fact that you have gotten a good company, let's take for instance Apple or Amazon, you have a good company, a very good, solid company that you love this company, you know their fundamentals. It's not enough to just pick a good company. You also have to get that company at a reasonable price. So if Apple were to be trading at $100, which was the peak of Apple, so is it wise for me as an investor to buy Apple at its peak? No. I don't want to buy it at its peak. I want to wait for some correction for it to go down so I can have a better entry level. So that's how you pick a good company. That's how you trade a good company. So you pick a good company and you get it at a reasonable price. So I want to be looking at some few indicators in choosing a good company. Number one, know the company you're trading. A lot of us don't take our time to understand the companies that we want to trade, and that's the first sign of a failed trade. That's the first sign of failure in the stock market. That you are trading a security, or you are trading a company that you don't even know nothing about. You don't know nothing about them. So do you know the company? That's the first one. Trading the company you know. Start with a company you understand. Amazon, what does Amazon do? What does Microsoft do? What does Facebook do? What is their global reach? Are they just restricted to a particular country? Are they restricted to a particular place or region? Is it global? So the second indicator I want to look at is company's fundamentals. So the company's fundamentals is, how does the company make money? What is their core business? What do they do? How well are they positioned within the industry? What is their income? What is their profit margin? What is their EPS? You want to look at their financial stability. You want to look at their financial health. Are these companies actually making money? Is their profit a consistent one? Is there a record? Is there a consistent record of their profitability? That's what you want to look into. How do they make money? What is their liabilities? What is their debt to income ratio? So you want to look at all of this. So these are the fundamentals. You want to look into the fundamentals, and that you can see in their different quarterly earnings report. So you can put their quarterly earnings report up. It's a public information. You pull it up and look at, are they making money? Why would I want to invest into a company that is not making money at the moment? A lot of traders use what they call technical analysis. Yes, technical analysis is good in order to check historical trends. Trends don't say much about the company's fundamentals. I like to trade with fundamentals rather than just trends, or rather than just technical analysis, because of what I'm going to be teaching you guys in this series. I'm an option trader. Yes, trends are good. You can get some few information from technical analysis, but that's about it. I want to know if the company is healthy in the first place, so that I'm not trading on just guessing or hype. And the third indicator I want to look at is competitive advantage of the company you are looking into. So if I was to buy an Amazon stock, what is Amazon's competitive advantage to its competitors? We have Alibaba, we have in different countries. I know, for instance, in Nigeria, they have what they call Konga or Jumia. So in your analysis, what threat does Alibaba or Jumia poses to Amazon? And what is Amazon's position in the industry? What is Amazon's competitive advantage in the online store? So that's what you want to look at. What is their competitive advantage? What is their global reach? How big are they? How many customers are they serving per day, in a month, per quarter? So these are some of the things you want to look into when you're looking at their competitive advantage of the company you want to trade. How well are they positioned in the industry? Are they a dominant factor in the industry, or are they just struggling? So would I rather buy Amazon stocks versus Jumia or Konga or Temu? So it becomes your choice at that point. So the fourth indicator we want to look at is consistent track record of the company you so choose to trade. What is their track record? Are they making money every quarter, or is just a one quarter hit performance? So you have 4 quarters in a year. So in all 4 quarters, how was their performance? Did they perform good in all of the 4 quarters? First quarter, second quarter, third quarter, and fourth quarter? Did they perform well? You want to look at that. Or out of the 4 quarters, their performance was only good ones and the rest were kind of shabby. So you want to look at their performance over time. Now, another thing is, how do you, in terms of track records, how does this stock react when the whole global system is shaken? You want to look at their performance during the shutdown, when everything was down economically in 2020. How did this stock perform at that time? Did it go down? Did it recover and performed even better than what it was before the shutdown? How is the stock reacting right now that you have Middle East crisis going on? So how is the stock performing right now that the economy is shaking? A good company would always, even while they correct, there's a correction in this market, they go down, they always come back higher. So you want to look at 5 years historical trend, 10 years historical trends of this particular stock. How did they perform during downturns? And are they growing steadily, or is just a one-time hype? It goes up to the moon. Here we go, from $10 to $100, and then the next 1 week it goes back to $2. So is that the kind of stock you want to be trading? No. Is that the stock I want to put my money into? No. I don't want to put my money into hype. I want to be strategic in my investment. So the fifth indicator I want to talk about is getting the company at a fair price. Not a good price, a fair price. So even great companies can be a very bad investment if you're paying too much for it. If am I paying a fair price? Am I buying the stock at its peak? If you're buying the stock at its peak, there's just so much possibility you buying it at an expensive price, at a very high price. So for instance, if Apple were to be trading at $100 and I don't feel comfortable buying Apple at $100, let's say that was the peak of Apple. So do I want to buy it at a peak, or do I want to wait for a correction? Having a good company at a fair price is going to be a better bet for you. So in wrapping up these videos, I want you guys to put in the comment section, just list 2 indicators of a good company to trade in the stock market. I'll see you in the next video.